Hey, good morning, everybody. My name is Cliff Backus, and this is your PushButtonStockTrading.com Daily Video Market Review Weekend Edition. Before we get started, I want to talk about three pieces of software that I find indispensable. I once had a friend for whom I have the utmost respect admonish me against shilling for the software companies. But I feel strongly that traders can and should benefit from highgrowthstock.com, freestockcharts.com, and marketsmith.com. So, shill I will. Let's start with MarketSmith. MarketSmith is a set of investment research tools for mastering the market, offering a set of extremely robust stock screeners, charts, and pattern recognition. More importantly, we use MarketSmith to generate our stock checklist, which we use to develop our universal watch list. Take a free trial of MarketSmith. Next, we have freestockcharts.com, which is a Warden Brothers product and has all the versatility of their TC2000 program on an a la carte basis. These are the charts we use in our daily video market review. I use the premium version, but they also offer an advertising-driven free version. And lastly, highgrowthstock.com, HGSI. HGSI is a remarkably versatile product that I use for analyzing and screening data. The Spectrum Analyzer is an HGSI product, and you can get a 1-month free trial of highgrowthstock.com, and you don't even need a credit card. And that's our commercial for this week. Okay, after early gains, stocks drifted lower for most of the session on Friday, closing up but weak for the session. Trading volume was mixed, higher than Thursday's levels on the New York Stock Exchange, lower on the NASDAQ. Volume on both came in below average. The S&P recorded a stalling day, which is a form of stealth distribution that occurs when one of the indexes closes in the lower half of its daily trading range on heavier trading volume than the prior session. For the week, the NASDAQ advanced 3.59%, the S&P 500 3.27%. New lows continued to outperform new highs Friday, but by a narrowing margin. Large capitalization stocks outperformed small, although small continue to outperform on a 10-day moving average basis. Advancing issues topped decliners by 3-2 on the New York Stock Exchange. Our market timing model on both the NASDAQ and the S&P 500 is now on an aggressive buy signal, which indicates that aggressive traders can buy stocks at this point, but more conservative traders should continue to accumulate cash. The O'Neill timing model, according to Investors Business Daily, is showing a confirmed uptrend in the market with 6 distribution days on both the NASDAQ and the S&P 500. Distribution, or higher volume selling in the market, is a sign of institutional selling, and too much distribution in a short period of time can be an indication that the uptrend is in trouble. Timing models are giving us a mixed signal, but our market timing model remains on an aggressive buy signal. Only the most aggressive among us should be buying at this point. Be careful. Keep your stops in place and at their tightest levels on all long positions. As always, be sure to follow your written rule sets. A note about written rule sets. Emotions are the enemy of good trading. Rules keep emotions in check, and written rules give us the greatest edge when trading. I write my rules down in outline forms, so there's never any doubt as to how to handle any situation that the market sends my way. If you'd like help with portfolio management or with your written rule set, please feel free to contact me. My contact information's on the home page. Okay, let's take a quick look at our Spectrum Analyzer. What we're looking at is HGSI, High Growth Stock Investors' universe of over 8,000 stocks, sorted by a combination of the most powerful stocks in the most powerful industry groups. We've made a group of the top 100 stocks in that sort. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we get an idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power is and get out in front of it. So let's plug these stocks into our Spectrum Analyzer and see where the strength in the market is. According to our spectrum analyzer, we can see that 14 of the top 100 stocks in our sort were from the real estate investment trust industry. 12 were from semiconductor devices. We had 6 airlines, 6 internet media stocks, and rounding out the top 5, we had 5 e-commerce discretionary stocks. We've been seeing intermittent strength in the airline industry. We've been seeing intermittent strength in the real estate investment trust industry. We've been seeing pretty consistent strength in the semiconductor device industry. These might be good places to look for stocks in this market. Let's take a look at the NASDAQ Composite. On Friday, the NASDAQ Composite was up 31.28 points, or 0.62%. We closed at 51.04, and we closed right in the middle of our daily trading range. Bulls would have preferred to see the market close higher in the trading range. The NASDAQ traded lower trading volume than the prior day, and it traded below average daily volume. For you followers of William O'Neill, we are in a confirmed uptrend in the market. The market went to a confirmed uptrend on October 2nd. Right now on the NASDAQ, we have 6 distribution days in the past month. While 6 distribution days is a lot of distribution days, notice we haven't seen a lot of distribution in the past couple of weeks. That's probably a sign of strength in the NASDAQ. Right now, the NASDAQ is bracketed by support down here in the 4,900 area and resistance up here in the 5,164 area. We also have this trend line. This trend line is our 2009 to August trend line and should act as minor support for the S&P in this area. I'm sorry, should act as minor support for the NASDAQ in this area. Right now, we are on an aggressive buy signal on the NASDAQ Composite. An aggressive buy signal means that aggressive traders can buy stocks at this point, but more conservative traders should continue to accumulate cash. The only thing that's keeping us from going to a buy signal on the market right now at this point is this 10-day simple moving average, which still stubbornly continues to trend downward. When that 10-day moving average begins to trend higher, we will go to a buy signal on the NASDAQ Composite. Let's see what the S&P 500 is up to. The S&P on Friday closed up 7.93 points, or 0.38%. We ended the day at 2089. Notice how the S&P closed in the lower half of its daily trading range. We tried to trade higher for the day, but in the end we drifted lower and closed in the lower half of our daily trading range. Trading volume was higher than the prior day. That's the definition of a stalling day. And so the S&P got another distribution day on Friday. S&P right now is in a confirmed uptrend, has been since October 2nd. And we are showing 6 distribution days on the NASDAQ, on the S&P 500 in the past month. Right now the S&P is bracketed by support down here in the 2044 area and resistance up here in the 2134 range. We are on an aggressive buy signal on the S&P. And I want to take off our markups here and take a look at what it would take to change our market timing model to a buy signal. In order to go to a buy signal, 3 things need to take place. First, our 10-day simple moving average, which we show here in green, needs to be trending higher. Secondly, our 21-day exponential moving average, which we show here in pink, needs to be higher than 2 days ago. And thirdly, the S&P has to be trading above this 1% envelope. This gray dotted line is a 1% envelope that brackets our 21-day exponential moving average. We're trading above that 21-day exponential moving average. Our 21-day exponential moving average is trading higher than it was 2 days ago, but our 10-day simple moving average remains stubbornly in a downtrend, and so we remain on a don't buy signal as our primary signal and aggressive buy signal as our secondary signal on both the NASDAQ and the S&P 500. Again, what that means is that aggressive traders can begin to buy stocks at this point, but conservative traders should continue to accumulate cash. Let's take a look at some stocks that we may be interested in watching, but before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, let's put together a little bit of a watch list for the week. The first stock I want to take a look at is LinkedIn Corp. LinkedIn provides a social networking platform enabling members to share their professional identity online via LinkedIn.com. LinkedIn's been working on this long cup with handle base, going all the way back to February of this year. It's a first stage base. We have a pivot point of 58.39. LinkedIn gets a 72% checklist rating and can be bought by aggressive traders on a break above that $258.39 area on at least 140% of average daily volume. Next, we have Store Capital. Store Capital is a real estate investment trust that owns 947 single-tenant commercial real estate properties in 46 states operating under long-term net leases. The stock has been working on this long cup with handle base, not quite as pretty as the LinkedIn base, but still a nice base. We have a pivot point of $23.13. This is a first stage base. Store Capital gets a 68% checklist rating and can be bought by aggressive traders today on a break above the $29.13 level on at least 140% of average daily volume. It's also worth noting that Store Capital has a dividend yield of 4.9%. Another stock with a nice dividend yield is Becton Dickinson. Becton Dickinson develops medical supplies, devices, instruments, systems, and reagents used in the healthcare institutions. Becton Dickinson has been putting in this nice cup with handle base with a pivot point at 153.25. This also is a first stage base. Becton Dickinson gets a 68% checklist rating and can be bought by aggressive traders on a break above the 153.25 area on at least 140% of average daily volume. Notice how on Friday we had higher trading volume than any down day in the past 10 trading sessions. That's our definition of a pocket pivot, and what that indicates is that aggressive traders, if they are so inclined, can get into Becton Dickinson here in anticipation of the breakout in the 153.25 area. Becton Dickinson also has a 1.6% dividend yield. Earlier in the Spectrum Analyzer, we noted that the airline industry has been intermittently fairly powerful here and may be a good place to look for investments. And so I want to run through 3 airline stocks pretty quick here. What we're looking at here is Southwest Airlines. Southwest Airlines actually set up this kind of cup and handle base. It's a 4th stage base, pretty late stage base. Southwest Airlines gets a 68% checklist rating. And right now we have a pivot point of 47.17. Notice the stock right now is trading at 47.32. And so we're trading above that pivot point. Southwest Airlines can be bought by aggressive traders. I would like to see trading volume pick up a little bit. Trading volume's been fairly weak. Also, this is a fairly late stage base, and so you want to be a little bit careful. Next, let's take a look at Alaska Airlines. Alaska Airlines also is putting in a late stage, fourth stage base here. We've broken above this trend line, which provided a great entry point, early entry point for traders. Alaska Airlines gets a 68% checklist rating. We have a pivot point of 82.78. And finally, let's take a look at Virgin America Airlines. Virgin America is working on a first stage base. It's a nice cup and handle here with a pivot point of $38.61. Virgin America gets a 76% checklist rating and can be bought by aggressive traders on a move above this 38.61 area. Of the airline stocks right now, Virgin America would have to be my favorite. It would be where I'd be looking to put my money at this point if I was looking to put money into the airline industry. The last two stocks I want to take a look at have set up wonderful trend lines and maybe setting up good buy points. Mobileye is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. They make the collision avoidance systems, and they also are integral in the development of self-driving cars. Mobileye has been working on this second stage base with a pivot point in the 64.48 area, but we've been watching this trend line. A break above that trend line could provide a really nice early entry point in Mobileye. Mobileye gets an 80% checklist rating and right now is my favorite stock. Worth keeping an eye on. Wait for it to break above the trend line and hopefully it will break above the trend line on very heavy trading volume. And the last stock I want to take a look at is Palo Alto Networks. Palo Alto Networks provides network security infrastructure products for enterprises, service providers, and government entities. The stock right now is working on this second stage base with a pivot point in the $200.55 area. Right now we're trading at $170.97. Palo Alto also gets an 80% checklist rating and is bumping right up against this trend line, which we've drawn in. This trend line would be a good early entry point for Palo Alto. A break above that trend line on heavy volume would be a good entry in anticipation of the breakout up here in the $200.55 area. Just a note, Palo Alto Networks comes out with earnings after the close of business today. I wouldn't buy Palo Alto today. I would take a look at how the earnings come out, and if we break above this trend line, I would buy it tomorrow. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.